morning and happy new month. Welcome to our weekly market analysis. Madam Chuks right here. We're going to be looking at some fundamental concept that has high impact of affecting the market for the week and some technical projections for the week. So we're going to be expecting Euro inflation report from the Eurozone members. So it's expected to print around 2.5%. So if you see the number prints above that, we're going to see Euro gain momentum across other range of currency pairs. So on Thursday, we're equally going to be seeing the Switzerland inflation report is expected to print around 1%. If this happens, we're going to see CHF gain momentum across all other CHF domicile pairs. Then, of course, on Friday, we're going to be seeing the Canadian labor market report, which houses the state of economy in the US as relates to labor market, percentage employed, and that of the unemployed members of the country. Then, of course, we'll be seeing the almighty NFP, all right, which gives us insight into the state of economy in the US. So the headline numbers are going to be the total job added to the economy, average hourly earning, and of course, the percentage of unemployed youth. Okay, so for the NFP on Friday, which happened to be the most and the central focal point for economic news events for the week, last month's figure printed around 272,000 jobs, better than forecast, because economists were actually projecting around 182,000 jobs, but it came out better than that. So, and equally, the unemployment percentage equally edged up to 4%, far above what was actually predicted around 3.9%. So we're expecting a replay of that for the month of July. So exactly at 1:30 GMT plus 1 on Friday, that news is going to be hitting the newswire. Now, technically speaking, we're going to be looking at the chart of DXY on monthly time frame. Okay, so DXY has been range bound. It has been in a horizontal range since October 2022, and last month being the month of June rather, we saw DXY traded into a major resistance zone, and of course, we saw the rejection. Although the month of June closed on a bullish note, but there was a rejection. If you go to the weekly time frame, you see that rejection clearly, right? So there's a trend line here that have kept the market bullish since this year, because from this low, which was the low of December last year, this trend line has been in play throughout the year, all right? And right now, we are seeing DXY testing a major resistance. And of course, last week, which is the last week of July, the last week of June, closed with an indecision candle, which is the first early sign of weakness. And we are seeing that weakness stepping inside a major resistance zone. And right now, today being Monday, we're already seeing a follow-up candle on that, signifying a rejection. Now, on daily candle, or on daily time frame rather, you see the trend line is quite clearer here. You can see the market actually, since Thursday last week, has been actually showing bearish momentum. And on Friday specifically, we saw a rejection candle from that major resistance zone. All right, so we saw a reversal candle pin bar. In this regard, we are talking about a shooting star forming of that resistance zone, and this is a sell signal. Today being Monday, we have seen a follow-up candle on that. All right, so if the bearish momentum sustained or gained on this resistance is sustained, we may likely see DXY rotate lower around to test levels around 105, which would be a confluence of supports with this trend line. If it takes out that level on daily closing basis, there's high tendency you're going to see DXY rotate lower to around 104 level, which happened to be the last low of this bullish move. So now on the market structure side, we are seeing a failure swing here, which is inability of the market to put up a higher high, right, as a result of this resistance zone. Okay, so my projection on this is, as long as DXY is still above this trend line, we are still technically bullish. But right now, we are getting a kind of rejection as a result of this resistance zone. So most times when market wants to break resistance, right, it will still honor it. So this could be a respect to this resistance before we eventually take it out. But on a personal note, if you're an intraday trader, you may want to scalp this on daily basis or on daily trading basis to trade it lower to this trend line. But I expect bullish momentum to step in when market gets to this trend line. And of course, if you break it on daily closing basis, we're going to see DXY trade lower. Okay. Now, if you go to the chart of gold right now just left a major support zone, right? Gold traded throughout, from the month of February all along, gold was bullish after it broke out of a major consolidation zone. So we've got this major resistance zone where gold is reacting from, and we traded into this low, which happened to be a major low for this very swing. And right now, gold has sustained momentum, which is lending credence to the reaction we are seeing on DXY. So expect this bullish momentum to continue, but the inability of this bullish momentum here to display above this high, the high chances we're going to see gold trade lower to retest the previous zones early broke out this year. Now, if you look at the pattern that is forming here, this looks like more like a double top. All right. So, but this pattern will only be completed if we see gold break out this low, and that low is around 23,000 level. All right, guys, and that will be all for this week's market analysis. See you again next week.